Welcome to my channel. Long time no see. Same shirt because I'm recording all the same day. Don't hate the play, I hate the game. I am here on a Friday night because this video is going to be about if you're married, right? What are some of the things you really need to consider if you're married, especially, well, even if you're not married yet, but will get married and you both have student loans or only one of you have student loans. What are the things you must consider? Here are the top 3 tips. Here we go. Number 1, understand what the best student loan strategy and standing is for you as an individual or you two as individuals. What I mean is, consider the factors. Do you work at a nonprofit? What is your income? What is your student loan amount? Do you want to pay it off as quick as possible? Can you possibly get forgiveness? What is your preferred approach? I have an entire video on your loan payoff strategy, which if I haven't already posted, I will. Otherwise, I will link it below if I've already posted it, okay? So number 1, understand what your student loan strategy is as an individual or not. Number 2, if you're on a standard repayment plan, right, which means you're on a fully amortized 10-year payoff plan, which is the standard plan the government puts everybody in. And you are not on an income-driven plan, which there's many plans that are based on your income. It's not just one. Some people think there's just one. But if you're on any of them that is based on your income, even if it's a Parent Plus loan, it's based on your income, then understanding getting married and the way you file your taxes affect your student loan payment. And this is what really gets people because they're like, wait, what? If I get married and filed my taxes jointly, my spouse could be liable to also have his or her income count towards my student loan. The answer is yes. Yes, that's highly possible and probable. So be very sure you understand what the implications are, okay? That's really, really, really important because there are 2 scenarios. If you hold all the debt, your spouse doesn't hold debt, but they earn money, you marry, file jointly, now your spouse's income will go to count towards your loan payment. Your spouse is not liable to pay it, you are, but their income is counting towards your payment. So just be aware of that because it could just mess up the whole forgiveness thing. Number 2, let's say you owe a third of the aggregate family household student loan. Let's say I owe 100 and my spouse owes 200. Oh my God, we better be doctors, right? But let's just pretend I owe 100, my spouse owes 200, okay? That's a third. I own 1/3 of the student loan debt. Well, for me, filing jointly is advantageous because let's say our household loan payment total based on our income is $1,000. I'm just going to make the math simple. Well, 30% of $1,000 is $333.33. That's how much I have to pay. In our aggregate household income, my spouse has to pay the $666.66 because they owe that part of the aggregate family household. That's if we're filing jointly. Now, let's say that my spouse owes $200,000, but my spouse does not work. My spouse is taking off to take care of the children. This happens all the time. You do not want your spouse, who is a stay-at-home spouse, to be paying a $666 loan payment because that is so expensive. That's like rivaling daycare, right? So there are tax loopholes in which your spouse could file into a loan plan that doesn't include your income or you in it. And if they earn $0, their loan payment will be $0. Okay, so you need to know that there are literally plans, and the way you file your income taxes will literally determine, in that example I gave, the difference between my spouse paying $666.66 and $0. That's a gigantic monthly payment difference, okay? So it's really, 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 I can't emphasize it enough, how important it is to fully understand what plan are you on? What plan is your spouse on? Do they want to remain on that plan? And getting a strategist. It's not, lenders are like, oh, call up your loan servicer. They'll give you the answer. It's like saying, oh, call up the IRS and they'll file your taxes for you. They will help you figure out all the exemptions and all the credits and all the things you need. The IRS will not help you with that. The same way FedLoans and Navient, they're not going to help you with this. It is not their job to get you the best understanding of what you should be doing with your student loans. So it could literally make a huge difference between paying $1,000, $600, whatever that is, to paying zero or a few hundred to thousands, okay? So I'm just telling you, as a married couple, it's really, really, really important that you understand what is happening with your student loans. I just cannot emphasize it enough because we've seen it. We've seen people get married, file joint, their payment goes from $200 to now $600. And it's like, oh my God, I didn't know. It's like, okay, just plan, okay? What is my third tip for married couples? Oh yes, is once you understand what that approach is, the third tip is if you have future goals together, understand how to set those goals together to both work towards achieving them. And the very specific example I'm going to bring up is buying a home. Well, guess what? Your student loans impact your debt to income calculation. Understand what is best considering your student loans. And the example I just gave of me and my spouse, for us, if that were the case, our situation, it's important to understand what mortgage type is best for our specific financial standing, especially in light of our student loans, right? So to really understand how is my student loan recognized in the debt to income against every single mortgage type. For example, FHA treats my student loan and my spouse's student loans combined very differently than Fannie and Freddie, right? And there's of course all these nuanced rules which I can go into, but I'm not going to go into it for the purpose of this video. All I'm going to say is, I'm going to make another video about this. All I'm saying is your student loan status and standing, whether you're in forbearance, you're in repayment, in grace period, or in school, calculate the debt to income for that student loan differently than if you are actually in repayment, okay? That's number one. Against all these mortgage types, calculate it differently. Number two is understand what mortgage plan is best for you considering your student loan circumstance. If you're both in income-driven repayment plans and you cannot qualify for FHA because you have too high of debt amount, you really need to consider conventional unless you qualify for VA, USDA, and these other programs, okay? So without going into all the details in this video, just know that your current student loan standing impacts the debt to income calculation and the overall mortgage plan you can qualify for, okay? So I just want to end with saying, hey, look, no matter what your circumstance, there is hope. You need a good plan. You need someone to work with you through a good plan and build goals together. That's what marriage is about, right? But understanding the impacts of marriage on your student loan debt is really key to understanding how you're going to work together to move from debt to the first stages of wealth building. So we cannot wait to join your team and help you figure this shiznat out, because guess what? It's not easy. Sometimes it's hard. Sometimes we look at it day in and day out, and sometimes we want to pull our hair out with how complicated it can get, right? So don't do this by yourself. Know you're not alone. Know that we are here to cheerlead you along the way so that you can achieve your financial dreams. You can get started. We have all kinds of tools and calculators. You can get started for free on our website, myloansense.com. I will leave the link below. If you like this content, any content about personal finance, my entrepreneurial journey, my personal story, please consider subscribing. We will catch you later.